a bar chart, which is a little bit more old school, but it is also a very, very popular and effective way of analyzing the price. And then lastly, we have candlestick charts, which is my favorite, which I think is also most of your traders' favorite to you. You do have other styles which I teach in my webinars, such as Heikin-Ashi, Renko, points of figure, equity volume, but the three major ones. Now with the line chart, as I said, most of us here will not be using line charts, okay? Because in a line chart, the closing prices of each period is connected to the previous closing price with a line. Okay, it is a very simplistic overview of what the market is doing. Now, that you'll see on Bloomberg or Reuters or some financial show, because your audience, they don't know anything. Okay, this is wonderful for my grandma. My grandma just wants to know, is gold going up or down? Is my Kruger Rand becoming more worth or not? Okay? But unfortunately, this simplicity sacrifices a lot of details. Okay, I don't get to see the open, I don't get to see the close, the high. Well, I do see the close, but not the highs and the lows that the price created. So for us speculators, not ideal. Yes, I need way more information so that I can make a good decision at the end of the day. How many of you use bar charts? Anyone here? No one? Okay, I think it's probably more of the older generation. And a lot of stock traders. How many of you trade stocks? Also nobody. Really? Oh, we got one there, but that's John, right? Okay, so bar charts, I'm not going to go into this too much because obviously nobody uses it. So a bar represents the range that the price created within a time period. So when you look at a bar, very similar to a candle, it represents a time period. If you are using the 15-minute chart, each bar or each candle represents 15 minutes. Okay? If you're using the daily chart, each bar or each candle represents a day, what the price is doing within that time period. So in order to draw a bar, we will follow the movement of the price here. So let's say the opening price is 1.3250. It goes up to 1.33, then it drops to 1.31, and it finally closes at 1.315. Let's say this is for the day, right? We are looking on a daily chart. So in order to draw a bar here, we'll take the high and the low. So the bar represents the range that the price created. So we draw a vertical line. That is just showing you the high and the low. And then the tick to the left shows the opening price, and the tick to the right shows the closing price. So very easy for us to understand, but luckily it gives us a lot more information. Right? I see the high, the low, the open, and the close. Right? Very, very similar to our candles. In coming to our candlesticks, they are considered to be the Japanese version of bar charts. And in order to draw a candle, we will take, once again, the movement of the price within a period. You will take the opening and the closing price, and you will draw a box, which is called the body of the candle. Then you will see you will have these vertical lines going from the body to the high, and from the body to the low that the price created. And that is your candle. Once again, showing me all the information that I need to make a good decision. Okay, the high, the low, the open, and the close. So, when it comes to our candles, the color differentiates between a bullish and a bearish candle. Now, a bullish candle is where the closing price is higher than the opening price. So what happens during the period is the price opens, let's say, at $1 and it closed at $2. Yes? Hence, my candle will be painted green. Unless you're working on a black chart, then it might be painted, white? Yes, I think. Okay. Now, for a bearish candle, the close will be lower than the open. Meaning that it opened up at $2 and it closed at $1, for instance.